investors watching Your Money this morning. Joining me right now is Capital Markets Chief Strategist Kathryn Rooney Vera. We're looking at inflation, Kathryn, still a worry on investor minds. Oil prices jumping nearly 2% this morning. Will this move raise worries of inflation long term? Look, we saw the move in lumber recently, but look what happened in the last couple of weeks. Lumber came down about 30%. What's your take on where we are with this issue? There's some who say this is going to disappear by the fall. Nancy Lazar at Cornerstone believes that this is not going to be an issue, this inflationary concern, come the fall. What do you think?
Well, it's temporary nature, especially when we're talking about the shortage and the base effects. Base effects are going to roll off in July, so I would even predate that back to July. So we have a couple more months of base effects where April, May, June, July of last year were devastating, of course, as the economy shut down, inflation plummeted. We had month-over-month negative data prints for inflation last year. So you have the base effects rolling off as soon as July, and then you have shortages, as Nancy mentioned, and you just did too, Maria, not only in lumber and raw materials, but of course in semiconductor, used cars, new cars. If you're out looking for a new car, as I was over the weekend, you're not paying sticker price. You're paying a premium to sticker price if you can find the car. But I'll add to what Mike said, and I think that another important point, maybe the most important point from my perspective as an economist with regard to cryptos, is it's an inflation hedge. I mean, it's very volatile, as Mike said it, but the fact is that as the dollar weakens, which in my view structurally and inevitably it will continue to do so because of the government massively indebting itself with this profligate, inordinate spending. I don't care if the infrastructure, which is really not infrastructure package, it's 2.3 or 1.7 or even less. We've already injected $6 trillion into the economy over the past 12 months, Maria, jacking up M2, which is the monetary base, increasing fiscal spending, Maria, to 30% of GDP. The CBO, for the last few days, published their recent piece looking at the fiscal budget and the trajectory, and it said, look, we all know how devastatingly bankrupt Social Security is. Interest payments on U.S. Treasuries are going to way outpace Social Security payments over the next couple of decades at this trend. So we are really, really digging ourselves into a massive hole, which is both inflationary, devastating for fiat currency. And if you take that position, then cryptos have more upside.
Yeah, okay. Well, that's interesting.